Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Gibraltar Industries INC quarterly report. Gibraltar Industries Inc. offers a diverse range of products and services across 4 key segments: residential, renewables, agtech, and infrastructure. The company's product offerings include roof and foundation ventilation, products, mail systems and package solutions, metal roofing and accessories, rain dispersion, products, gutters and accessories, exterior retractable awnings, pipe flashings, remote-controlled deck awnings and valances. In the renewables segment, Gibraltar provides solar racking and electrical balance of systems for commercial and distributed generation scale solar installations. The agtech segment offers controlled environmental agriculture solutions, custom greenhouse designs, and structural canopies for various applications. The infrastructure segment includes expansion joints, structural bearings, rubber preformed seals, elastomeric concrete, and bridge cable protection systems. Gibraltar Industries Inc.'s stock price drop. A year of challenges. In the past year, Gibraltar Industries' stock price has experienced a decline, with various factors contributing to its performance. The company's stock price fell by 5.11% over the last 12 months, according to Trading Economics. Several key events have likely influenced this trend. One significant factor was the Q3 2025 earnings miss, where Gibraltar Industries reported lower than expected EPS and revenue. This was partly due to a downturn in the residential roofing market, particularly in Texas. Analysts also downgraded their forecasts for the company's EPS and revenue in August 2025, citing business headwinds. Furthermore, fundamental weaknesses in the renewables segment, including a decline in revenue due to market softness and strategic portfolio optimization, contributed to the downward trend. The residential segment also experienced a drop in sales. These factors likely cumulatively led to a stock price drop of around -6.81% over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by strategic acquisitions, which have contributed significantly to the company's revenue increase. Specifically, the acquisition of Lane Supply in the agtech segment has generated $118 million in revenue, while 2 businesses acquired in the residential segment have added $90.5 million, and 1 business has added $16 million. In addition, there has been a notable increase in net sales within the residential and agtech segments, with growth rates of 8.4% and 278.1%, respectively. On the other hand, revenue decline is primarily attributed to discontinued operations, which have resulted in a loss of $122.3 million. The residential, agtech, and infrastructure segments have also experienced declines in revenue, totaling -$1,623,000, -$675,000, and -$1,757,000, respectively. Overall, the company's revenue growth is driven by strategic acquisitions and organic growth within key segments, while revenue decline is primarily due to discontinued operations and segment-specific declines. Net income and profit margins decline. A summary of the changes. The financial summary reveals a decline in net income and profit margins for the company. For the 3 months ended September 30, 2025, net income decreased by $123.1 million from $34.04 million to -$89.06 million. This trend continued into the 9 months period, with a decrease of $132.4 million from $91.2 million to -$41 million. Profit margins also suffered, with gross profit margin decreasing from 29.3% in 2024 to 26.6% in 2025 for the 3-month period, and from 29.9% in 2024 to 27.7% in 2025 for the 9-month period. Operating income margin declined from 15.5% in 2024 to 12.8% in 2025 for the 3-month period, and from 14.5% in 2024 to 12.4% in 2025 for the 9-month period. The reasons behind these declines are attributed to various factors across different segments, including product mix and integration costs in residential, lower organic volumes and integration activities in agtech, inefficiency related to supplier transition in infrastructure, and changes in compensation and acquisition-related expenses in unallocated corporate expenses. The company's financial performance indicates a consistent generation of positive operating cash flow over the past 2 years. In 2025, the company generated $105,000,000 $380,000 in operating cash flow, while in 2024 it was $131,551,000. This trend suggests that the company is effectively managing its operations to produce a steady stream of cash, positioning itself for long-term financial stability and growth. The company's financial summary reveals that there has been no significant change in its debt level. As of September 30, 2025 and December 31, 2024, there was no outstanding debt. Additionally, the interest expense has also remained relatively stable, with a minor fluctuation from -$1,931 in 2024 to $2 in 2025, which is later corrected to $2,000 in 2025. Overall, these figures suggest that the company's debt level and interest expenses have not undergone any substantial changes. Management is focused on improving operating performance through restructuring initiatives. Their strategy has three core pillars: business system, portfolio management, and organization development. The company aims to achieve stronger financial results, efficient capital use, and higher shareholder returns. Key highlights include improving profitability across segments, investing in operational excellence and growth initiatives, prioritizing working capital efficiency and profit improvement opportunities, strategic acquisitions, including lane supply and metal roofing businesses, share repurchases under their share repurchase program. The company has ample liquidity to meet both short-term and long-term cash requirements. The company has made significant moves in its financial strategy through acquisitions and divestitures. Notably, it acquired a privately held business specializing in metal roofing systems for $16 million in July 2025. Additionally, the company purchased Lane Supply, Inc., along with 3 metal roofing businesses. On the other hand, the company has also initiated a process to divest its renewables business, which was held for sale as of June 30, 2025. The company's financial summary reveals a significant trend of share buybacks over the past 2 years. Specifically, in 2025, the company repurchased 914,679 shares worth $63,542,000. Additionally, in 2024, it also bought back shares for $10,940,000. This indicates that instead of distributing profits through dividends, the company has chosen to invest in its own stock by buying back shares from the market. That concludes the financial summary for Gibraltar Industries Inc. Feel free to comment below, and I will be happy to answer them when possible.